It is 12:30 Eastern time, and it is Tackle Trading's halftime report on a Wednesday, 7/17/2019. Coach Matt, Coach Tim, producer Cody. Lazy summer days, Matt. How are you doing today, brother?
I am doing very good. Excited to be here for the halftime report with the crew.
It's hot outside. You know, it's dry, and the heat is definitely there here in Utah. Sitting inside trading is a nice way to spend your afternoon and your morning. There's no doubt about it. We're going to talk markets on a two-day pullback. A two-day pullback is not a retracement, Matt. By definition, in the step system, we need to have at least 3 candles coming back down at a certain percentage. In fact, it's kind of says a lot about the market when we're down 1/3%. We're both like, well, maybe we'll get some action here because there's not really been a lot of selling in the last couple of months. What's your read on the overall S&P right now?
You know, looking, and obviously we got to talk a lot about earnings and talk about upcoming earnings as well. But let's take a look at this from a technical perspective very quickly. Dropping this down into that 30-minute chart. We discussed yesterday, Tim, how the market was coming into this support level right around that 205 level, old resistance, new support over here on the intraday. And I said, well, we're probably going to get that retracement, which we really kind of did on that 15-minute chart where you're looking at it right here. This is where we were analyzing it, Tim, got that retracement coming back up into this intraday support level, kissed off that intraday support level, now resistance, put a lot of pressure on the market. Market closed right around where it kind of hit that support level. On the overnight action, we did have a fade up, but from the cash open here, Tim, you broke that support level, broke 3,000, came back, kissed 3,000, and that's kind of what I said earlier in the pre-production show is, you know, we might get some action here just based on the intraday technical setups. You do have a bearish short-term downtrend from an intraday perspective. Obviously, we're only looking at a two-day pullback on the actual daily chart. But if you can break this support level around 29.96, 29.95, you could see some action to the downside today.
You know, humor me here for a minute, Matt. Kick it down to a four-hour chart. 4-hour chart bullish. Now down to a 1-hour chart. I was looking at this. This one mixed because now you're below moving averages. Now down to your 15-minute chart like we were just analyzing.
I'd call the hour chart bearish.
Yeah, bearish. Yeah,
I'd call it bearish.
30-minute, just keep going through the time frames. Bearish, right?
I'd call it bearish.
15.
Bearish.
Bearish. 5. Bearish.
Bearish, but mixed on the 5.
Mixed at the best. And then the 1-minute chart.
Mixed.
I mean, so basically the intraday technicals have mixed but bearish leaning across many different time frames, and the daily technicals are still bullish. I mean, the market is still bullish. I was looking at the ARCA high-low relationships that we put on the newsletter every week. I was looking at how many advancers versus decliners across the New York Stock Exchange today, and the market's still in a bullish trend. Let's not overthink it, but when you get into these retracements, into these pullbacks, what's your general approach mid-morning? I mean, is this a good day to put on theta trades to prepare for tomorrow? Are you watching for something specifically? How do you handle that?
Well, if you're looking at day trading here, then obviously you're focusing on those intraday timeframes like we just looked at. And one of the reasons you're seeing a little bit of mixed action on those very extreme short-term type price movements, a little bit on the 15, but really kind of on the 5 and on that 1 and 2 minute chart, is when you're looking at this from a 30-minute chart, you're really just kind of seeing consolidation happen. And that's what's happening on that intraday chart on the 1 minute, the 5 minute, and some of those shorter time frames, is you're seeing that mixed action because of this consolidation. And if you're looking at day trading, obviously it starts with the breakdown. That's what it really kind of starts with here, is waiting for that to break down, because as a day trader, you're really not looking at anything bullish until you reclaim 3,005 right here on the intraday old support, now new resistance. So if you're looking at it from a day trading perspective, if you're not picking up the crumbs at the bottom of the intraday downtrend, you're looking at trading this to the downside from an extreme short-term perspective. From a daily perspective, I don't think anything today is changing my overall posture on the market. I don't think anything yesterday is changing my overall posture on the market. We are slightly bullish to bullish in the S&P 500, and you should trade accordingly.
Yeah.
So on days like this, work off your reports, work off your watch list. Bullish retracements, bullish breakouts, bearish breakdowns, bearish retracements. I mean, the market's going to be a stock picker's market right now.
Yeah. One of the first things that we're going to do each and every day during this season is talk about some companies that did have earnings. Bank of America, real quick first here, Matt. A couple companies that beat Bank of America, United Airlines, Abbott Labs, and Cintas. Numbers were good, chart not so much. Just kind of mixed. What's your read?
Here's the numbers for Bank of America, Tim. It came in at 74 cents earnings per share versus the 70 cents expectation. So a slight beat on EPS numbers. Revenue came in really good, in my opinion, $29.1 billion versus $23.1 billion on the actual revenue. And we've seen that with all the banks so far, Tim. We've seen almost every bank so far really kind of slightly beat earnings per share, except Goldman. They did really, really well, but they've all done pretty good on revenue. And same thing here with Bank of America, came in at $29.1 billion versus the 23. That's a really good beat on revenue. Now, again, all these are really, really good beats on lower expectations, correct?
Mm-hmm.
But
Yeah.
they're still beats, correct?
And well, that's the whole point of lowering expectations. It's what these companies did for months, right?
Well, it's not just months, and I know I mean, it's easy to make fun of it, right? But the company's been doing that for decades.
Mm-hmm.
I mean, Apple was notorious for lowering guidance for like 15 straight years coming into earnings just so they can beat it. And they had like 10 straight years of beating their expectations just because of lower guidance. But it really doesn't matter. It's how the market kind of responds to it. And you had a really good beat on Bank of America. Revenue is up 6.6% year over year as well. Really kind of muted on the response from a price action perspective, but you are up 1.67% on the day, and you're really kind of approaching a breakout on Bank of America. And if you can break out of this level, in my opinion, put that level right there at about 29.60, you should see 30. 30 is very important. It's a break of 30, you could see some type of continued bullish uptrend for Bank of America. So keep an eye on Bank of America.
Quick look at United Airlines. I like trading the airline stocks, UAL, DAL, some of those other ones. With oil under pressure recently, airlines have kind of done pretty good, actually. Higher high, higher low, higher high.
Yep.
Earnings beat here, Matt, and we broke out yesterday. Now continuation. Not a new swing trading entry point for me, but definitely going to keep it on a bullish watch list is what I'll do personally.
Yeah, numbers on United, 4.21 EPS versus 4.07 on the expectation. Came in line with 11.4 billion on revenue. Year over year, revenue up 5.8%. So, and okay. I mean, I wouldn't say it's a bad earnings report, but I wouldn't say it was a rock star there. Market was a little bit muted on the cash open. But really, from an intraday's perspective, if you look at this on United, cash open came down a little bit, but since then you're coming right back up, and you got this pretty clear level of resistance right here, Tim. So you could say, yeah, it's not a new entry, and I agree with that. But if you're playing this from a momentum perspective, if you can break out of that intraday resistance level, you should see some run.
A couple of companies that are actually really fundamentally sound that I love their reports. I love the price action as well. Abbott Labs, quick look at this one here, Matt, and then Cintas, CTAS. This ABT candidate here, it broke out on this earnings release, so it was down 4 days in a row. Now the breakout, it's only a doji above the resistance, 86.21, but that is significant from a pricing perspective. Markets are flat to down today, up 3.6%. I like it. That one out of the three we've looked at is the most interesting so far to me.
It's gotta hold 86 right here. It's got to hold that level at 86. You got to see a close above that level. When you're dealing with a bullish uptrend consolidation at the top end of the bullish uptrend, and you have an earnings gap like this, you would have to call that a breakaway gap. Is what you would have to call that at this point. But for it to continue to be a breakaway gap, you have to close above that 86 level. If you come back down underneath 86 at that point, and you can see this 86 level right there, if you can come back down underneath that 86, I'm not going to call that a breakaway gap, but everything that you're seeing from the cash open here, big price upward movement in price, and Abbott reported this morning, obviously. And then when you saw that kind of just simple consolidation, Tim, you would call that a flag-based intraday pattern here. It's really kind of trying to hold that 86 level. Keep an eye on 86 on Abbott Labs. The numbers, Tim, 82 cents on earnings per share, 80 cents on the expectation, $8 billion on revenue, came in at $8 billion on revenue, 2.7% year over year. But really the kicker here was not the actual report, Tim. The report was really kind of just came in line with the expectations, but a slight upgrade on guidance here for Abbott Labs.
Very conservative company. I mean, you can only get about a 1.2% covered call on this 30 days out map, but I do like the fundamentals. Dividend payer, consistently growing.
Yeah.
EPS numbers are great.
We've looked at Abbott Labs for the Tackle 25 for multiple years, and you can't get the return. I mean, look at the implied volatility ratings.
Yeah.
I mean, it's just,
if that company paid 2%, it would be on our list. I guarantee it.
It would. We like this company, no doubt. But when you see an implied volatility at 18%, you can't get anything there.
Yeah.
I mean, you just can't. And a rule of thumb, Tim, is like if you have 30% on implied volatility, you could typically get about a 2.5% return on investment on a covered call.
Mm-hmm.
You got a 40, you can get about a 3.5%. When you have like an 18% volatility rating here, you're going to get a 1.5, 1.2% ROI. And it's just, it's good from an investor perspective, dividend paying stock, but you just can't monetize it very well.
By the way, it's a good example and a learning moment here, guys. And I want you to put it in the chat, put in poor boys covered call. It's not a good regular covered call, Matt, but the leap covered call, when the volatility is that low and it has such consistency long-term, you don't get the benefit of the dividend. But when you do have stability in the trend, that poor boys covered call is in play on something like this. Definitely a concept maybe we could revisit here in one of these theta Thursdays at some point.
You could get a poor boys covered call on anything, though. It's just a matter of, do you want to play it like that?
Right. I like slow moving, boring stocks for poor boys cover calls personally. So like in Abbott Labs, I would prefer a lot over a Netflix because it's harder to manage those really high volatility.
I agree.
Yeah,
I agree.
Cintas, Matt, you got to look at this company right now. I know it's been something we've looked at over and over and over again. We've had it on the option report a couple of times the last quarter. Just a juggernaut trend, and they absolutely crushed earnings here, up 7.7%. How did you read the numbers, first off?
The numbers on Cintas, 2.07 on earnings per share, 1.94 on the expectation. So a good beat on earnings per share, 1.8% of against not 1.8, but 1.8 billion versus 1.8 billion on the expectation, 7.4% year over year. And again, a slight increase in guidance here. And very similar to what we were talking about with Abbott, it's really that slight increase in guidance. We haven't seen that very much over the last few earnings seasons, Tim. And so when you have a company that does have a slight increase, and when I say slight, I mean they were both slight. It's going to play out pretty well for the company. And when you're looking at this right here from an earnings gap situation, you have a trend going into it, a very consistent trend going into it. And when you have that consistent trend going into an earnings gap, you have to, especially, and again, this is just reading the tea leaves after the gap range. But when you have this trend, you gap out of that trend, that is either going to be a continuation gap called a runaway gap, or that is going to be called an exhaustion gap. And so the exhaustion gap comes back down after the gap. And so what I'd like to do when I'm trying to determine whether it's an exhaustion gap or whether it's a continuation runaway gap is read it after the cash open. And so when you're looking at this on the cash open here, you opened up on the overnight and then you ran a little bit on the overnight. If that would have came back down in a profit session, you would call that an exhaustion gap. So at this point, it should be clear selling. Obviously, you might not want to chase it. You might want to wait a few days to kind of see the consolidation and find a better trigger. But at this point, as long as it stays positive, you got to call it a runaway gap.
If you're out there watching the halftime report right now, let me do a little bit of education real quick. I mean, everything about a company's fundamentals comes down to earnings, revenue, all the numbers, the basics, Matt. But when you have growth, when you're a stock like this that is growing, I want to just read you a few numbers and you tell me how impressive this is. 2014, 15, 16, 17, and 18, it all grew at least 10 to 20% EPS year over year. I mean, look at the numbers, 3, 3.6, 4.1, 4.2, 5.55 into 18.
Everybody in chat, just type in sexy. Let's pull it, Tim. Just type in sexy. When you see in terms of this growth here, and you don't see this a lot, T. You don't. I mean, you see every now and then a company will have a down year, right?
Yeah.
But when you see 3.05, 3.63, 4.14, 4.27, 5.55, that is sexy. That is sexy from a growth perspective. And there's a reason that has that consistency of trend that you're seeing over the course of the last really 6-7 months. It's really good from a fundamental perspective, and the earnings definitely justified it today.
It's got to be on a bull watch list. It may not be tradable here today for you guys, but that's not the point of reacting to earnings. I mean, earnings can set you up now for the next 3 months, right? So whenever companies have them, there's a reason why we're digging into them. I love this one. It's going on my longer term watch list as well.
It's on my watch list too.
Ding, ding, ding. All right, keep working. Couple companies missed. CSX, railroad companies.
Oh, Tackle 25 CSX too.
Yeah.
Little train there didn't want to run with us. CSX, one of the only misses in the market here today, Tim. CSX comes down at 1.08 on earnings per share, 1.11 versus the expectation. So a slight miss on earnings per share, 3.1 versus 3.2 billion in revenue, slight miss on revenue, 1.3% year over year decrease in revenue. And the kicker, lowered G, lowered guidance.
Not good.
No, it's certainly not good, and that's why you call it trades coming into earnings. But looking at this from a price perspective, I'm very concerned with the reaction after the cash open as well, Tim. Not only did you not have this type of movement on the announcement, but here's the cash open showing you a lot of movement to the downside as well. Looking this back on the daily chart, 70 maybe holds as support. I mean, it held as from an intraday perspective, but if 70 doesn't hold, I mean, 65 is in its sights.
Volume's high. The sell-off is precipitous. It broke below a pivot point to support point. It does pay a dividend. I'm
concerned. Warren Buffett cares about the gap?
He doesn't.
Because he's an investor.
No, he doesn't. And by the way, I got a question in the chat that I was responding to. Dan says, noob question. If you're called out on a PBCC, the old poor boys cover call, short position, do you actually get assigned, or does your position just close because you're covered? It doesn't close your leap, Dan, because they're different relationships. But what it does is if it goes in the money, you let it expire, you do nothing, you don't roll it, it will just short shares of stock that you'll have to manage the next Monday morning. So that's really where it is. It's a transfer from the stock or from the option to the stock, but management is critical if you're going to trade a strategy like that.
It is not cash settled.
And by the way, CSX, when we see in a railroad company dropping like this, the train jokes were going to fly. I knew it. Justin says, looks like a train wreck. I was thinking about
well played, Justin.
The little engine that couldn't is
Mark. I think Mark would give you a 5.
5 yard line. Oh,
I didn't say if it was on the bear or the bull side.
You did not. All right. And another company that I want to talk about, non-earnings related, Amazon's being investigated. Matt, you and I were talking pre-production. I mean, how are these governments, whether it's the EU or the US, the Congress, whatever it is, how are they going to really regulate these companies like Amazon, Facebook?
They're not. They're going to fine them. I mean, they're going to fine them. And that's what we saw. We're seeing that with Amazon in the EU right now. Some antitrust concerns and some absolutely understandable antitrust concerns. Google, anti-competition concerns. Facebook, all everything concern. I think Facebook, like the all everything bubble that Bernanke started 10 years ago, the concern was with Facebook and regulations is literally everything from social media to sharing fake news to profiting off that to now the whole Libra and what Libra is going to be from a regulatory perspective. So they're going to go the NFL route, Tim. They're going to go the NFL route, and the NFL route is if one of their players messes up, let's fine them $11,000, okay, but they make $11 million. Let's fine Facebook $6.5 billion, but they make what, 20 billion in a quarter, and it's worth what, 800 billion as a company.
Yeah.
I mean, you can't find your way to making Google, Amazon, Apple, and Facebook, play fair. That's not going to help. So, and I'm not going to sit here and say I have the answers, because that's why I asked you the question, right? But I just don't think fining is going to do it.
I don't either.
The EU fined Google last year $5 billion, and they did nothing.
Okay, and I understand. The I understand the instinct potentially by some people to look at Google, Facebook, Amazon, all those kind of people and say, man, they're just too successful, break them up. That's not capitalism, guys. They are
And this
innovative.
isn't the 19th century either.
I understand that as well. I agree 100%. Tax them, make them pay their taxes, but let them grow and be successful. Come on, guys. Let's
don't hate success, but Amazon should pay taxation.
I agree. They do need to pay some taxes and kind of kick in their fair share, just like everybody else as well. Moving on to the Dow, the NASDAQ, and the Russell. Quick look at the Dow. I don't see a lot going on. A couple of mixed companies, same different index though.
Same. But it's doing what we talked about, though, T, on Monday after it kind of got overextended in the short term. We talked about it forming that little bit of a high base here. And if you'll remember kind of that line we drew in the sand here, if you just extend that out to today, you kind of hit your head on that on the overnight. And so you're just doing that fade action here. A breakout at 27,400 would be tradable, in my opinion, showing a little bit of weakness on the intraday the same way the rest of the market is. But again, when you're looking at this intraday trend, you're like, oh man, that's a very, very bearish trend right there. And you're like, yeah, it is, until you look at the daily chart and it's like a doji, I mean, it's just, there's not a lot of price movement there.
I'm seeing some nice retracements developing on Dow companies, Matt. I will tell you, I know earnings are going to play a role into so many of them, but go check out those charts, guys. Travelers and, McDonald's and Home Depot and Walmart, Chevron. I mean, there's Microsoft's on a great pullback, but just be aware of when the earnings are coming down the pipeline. I've not bird dogged those yet, but I'm seeing some nice retracements.
It's amazing how many good technical formations get blown up because you have earnings 4 days from now.
That's why you gotta.
It happens every quarter. For the new traders, just get used to it. Happens every quarter.
Well, and there's plenty of trades to take. I mean, think about it like this, Matt. The option report last weekend, while I was out there traveling in Boston teaching, and you were down in Dallas teaching, I come into the report on Saturday, and there's 17 bullish candidates on the option report. And they didn't have a hard time finding trades. The bird dogs, they went out, they found
the bird dogs did their job.
And they did their job, no doubt about it. Moving on to the NASDAQ real quick. I don't see it.
That's what bird dogs do, T. They hunt.
When they're well trained.
They hunt for us.
My dogs are lazy.
Your dogs are, but the tackle dogs are very efficient.
Tackle dogs are brutal.
Is that new now? The tackle
dogs. I like it.
The tackle dogs.
The dog pound.
Is that like a Chicago dog? Is that like the Cleveland dogs?
Maybe the dog pound. Yeah,
the dog pound. Okay, the tackle dogs.
Tackle dogs. All right.
I wonder how they're going to feel of us labeling them the tackle dogs.
Hey, dude, when I was a kid, my nickname was T-Dog.
T-Dog.
That's right.
You were the original T-Dog.
I was the T-Dog when I was a kid. In fact, I was at the theater the other day with my daughters, and all of a sudden I hear, hey, T-Dog. And I'm like, that's got to be a kid from junior high school, because that's the only time I was ever called that nickname. And it was an old friend. Matt,
I think tackle dogs is going to stick, by the way. I think it's going to stick. I think they're going to hate it.
No,
and I love it.
I'm embracing it. Own it, embrace it,
own it. Let's look Netflix, bro.
Let's do it. I think we have to. I'm looking at all the different companies on the NASDAQ, but there's not a single story more important than Netflix right now, because Netflix has their earnings tonight, and it is a very, very important quarter for one of the FANG stocks, one of the most important traded companies in the market. You did a bunch of research on this one, Matt. What did you see? What's your preparation? What's your anticipation?
Whenever I go into analyzing an earnings report and volatility, I try to not look at the market maker move before I do it. And the reason, I don't want to be biased. I don't want my analysis to match identical to the market's analysis, because I know what the market maker move is. And so before we got on the pre-production show, T, I ran all those last 4 gaps in Netflix. So I ran the average gap here, average gap here, average gap here, and the one over here that you can't see on my screen here, but the last 4 average gaps. And I'll give you the numbers, okay? The first gap went $6 or 1.7%. And when I'm averaging the gaps, I'm going from open to close. Close to open. That's what I'm going, close to open. So I'm not really looking at the movement after the fact, T, which Netflix changes that analysis. But I'm just looking at the closing to the next day's opening within their earnings announcement. $6, 1.7% on the first one. there was no gap on the second one, no gap. On the third one, it went 33 points and a 9.5% price movement. And the fourth gap went 53 points and a 13.25% price movement.
Mm-hmm.
So you're really all over the board when it comes to, no gap, 1.7% on the gap, 9.5, 13.25. When you average the gap range out, it averages at about 23 points is what it averages out, which means it averages a 6.11% gap range. So that's your raw numbers. And then when you come over here to the Analyze tab and you look at that market maker move projection, and it's 24.4, which is a 6.5% expected gap range. Now, coming a little further than that, T, so I feel like the gap range on it, the market maker move is fairly put into there. I don't know if you have an edge there, but you might have an edge sometime tomorrow. And what I mean by that is Netflix here, you got your top end of the channel at 386. You got your bottom end of the channel right here at about 340-ish.
Mm-hmm.
You're currently at 365. The average expected gap range on Netflix, if it gaps down, is going to gap down right into major support levels. And I could see a couple things playing out here on that. I could see a snapback rally, gap down 340, buying opportunity if support holds. But if support breaks, you could see a runner on you.
Mm-hmm.
A gap up on the market maker move, though, is breaking out of this 386 level. Not by a lot, but it would be breaking out just slightly above those levels. And if you look at this from a weekly perspective, you see a gap on that, traders are going to buy that. Okay.
Yeah.
Now, Netflix does have some, crazy ex-boyfriend, crazy ex-girlfriend type scenarios here, though. I mean, there's a lot of scenarios where Netflix gaps up, goes down, gaps up, comes down. And so it's going to be a ride, but I don't think you have an edge on the gap unless you do some type of inverted fly. I could understand an inverted fly here.
I agree with that. And if you're a volatility trader, just follow me for 2 seconds. Not going to teach the concept, but basically you have to be able to catch profitability from a move, right? And it's got to go up or down, but it's got to go up or down a little bit beyond what that gap expectation is to make some money. These are expensive options. So a straight straddle strangle, that's just far, far too aggressive. Obviously can't do that bad. Inverted fly sounds great to me. I think it would be the way to play.
Debicon.
Maybe I tried to price Debicons all morning though. They're expensive.
I'm going to do the fly.
Yeah,
that's what I'm going to do.
Yeah.
And when you're looking at the fly, and you have a 24 point movement on the market maker move, and let's just go 30 days out here. You can do calls or puts. You could go something like a 370 by 355 by 385.
Mm-hmm.
Something along those lines. So if you don't have to do the inverted fly, you could look at that. That's kind of what I'm looking at, is the inverted fly on this one. But I'm also looking at this tomorrow morning to see how it's going to handle the gap range. I expect a gap here. I expect support and resistance to play a role here on the daily chart. And so I'm looking for perhaps a breakout here, Tim. And Netflix is up 40% year to date. You wouldn't know it if you just looked at the last 5 months, since all of that 40% came in January, right?
Mm-hmm.
But Netflix has really kind of been held in this channel for the last 5 months. If you can get a breakout one way or the other, you should see some running. You should see some running after the fact. So I'm excited for Netflix, both from an inverted fly perspective today, as well as just kind of seeing how this breaks out. But from a longer term perspective, though, 2 things that I want to see in Netflix's earnings report tonight. I want to see subscriber growth. That's obviously what everybody wants to see. But the concern I have with Netflix is, as every one of their competitors, from AT&T to obviously Disney to Amazon Prime, Netflix has built their juggernaut licensing other companies' content, and those other companies, ABC, NBC, CBS, Warner Brothers, all those other companies, Disney, they have either pulled their content back or they have, stopped production of it. I mean, Netflix is losing, Office. They're losing Friends this year, and they're losing The Office next year. And when you look at their cost for production of new content, that is very, very concerning. They spent $12 billion in producing their own content last year, which is a ridiculous number. And if you just look at Emmy nominations, here's old, HBO coming in with 130 and Netflix with 13. They have a content production problem from a cost perspective. So I'm looking at the rising cost of production. I mean, I'm interested in seeing what they say about that in the future as well. This could be a very, very important earnings report for Netflix. And Slavic, Seattle Gen, yeah, I looked at Seattle Gen earlier today as well. S-Gen, let's take a quick look at it.
By the way, while you bring that up, Coach Slavic actually did the Traders Lounge today, and he was talking about day trading this company a little bit, I think, based on his intraday.
He probably had a lot of fun day trading that earlier today. Seattle Gen's numbers came in at negative 24 cents. Now, you might think, Matt, it came in a negative, but look at it. It's breaking out and it's running. Well, it was expected to come in at a negative 0.39 cents earnings per share. So a beat on earnings per share, really good beat on earnings per share. 218 million versus 119 million. And the big kicker is the big G. They gave a slight increase in guidance as well. Look at that breakout of resistance. That is a breakaway gap, and you are not stopping on the intraday. You opened, you based, and then you literally just broke out as we started the halftime report. That's a great call right there, Slavic, on that breakout, and now it's starting to run again.
You know, going back to a thought we had a minute ago on Amazon, I just saw a headline, have to bring it up. I know it's bringing it back, to an old topic we're just to finish, but their Prime Day sales, Matt, were higher than their Cyber Monday, Black Friday sales. Who cares if he wants to regulate them? They're making too much damn money. It really comes down to it.
Yeah, can we not call it Amazon Prime Day?
I know. I don't want to trigger
48 hours.
Trigger you. All right.
48 hours. What is it next year? Is it going to be 72 hours next year? And then in 5 years, we're just going to have Amazon month. And then
Amazon can keep marketing it that way. Yes, they would love that. They would love to have Amazon month.
And the entire time, there's 40% of our demographic that cheers the fact that they pay no taxes.
Let's see who out there gets the movie reference. Matt, I know you'll get it. In the future, all restaurants will be Taco Bell, and all stores will be Amazon as well. Matt, do you know the movie?
Hold on. Okay, it's either Demolition Man or...
That's it.
Is it Demolition Man?
Wesley Snipes,
did I nail Demolition Man?
90s.
Oh, I nailed Demolition Man.
Post-apocalyptic world. In the future, all restaurants are Taco Bell.
Demolition Man. That's right. By the way, severely underrated movie.
I'll watch it again right now.
Severely underrated. I'm watching that right when we get done with the halftime report, and then I'm going to put on Inglourious Bastards just to make me feel good.
Hey, man, I'll tell you, if you want a feel-good show to watch, if you're not into the Demolition Man and all that kind of stuff.
I thought I just said Inglourious Bastards was the feel-good movie of the summer.
I watched, what's that old Joseph and the Amazing Technicolor Dreamcoat. I watched the entire video on YouTube last night, and it brought me back to my childhood and the music and all that kind of stuff. Just amazing. It's the summer. We're trading. There's a reason why we got time to watch movies, Matt. There's no doubt about it. Quickly,
what's the famous Utah siblings that did that?
Oh, I was going to say the Osmond brothers. Not the Allman Brothers. Very, very different style of music. Very, very different lifestyle as well. Let's keep working, Matt. I want to get to rapid fire here.
Let's do some rapid fire.
Let's quickly look at energy and crude oil, gold, and the dollars.
Yeah, run through them. Halftime crew, get your rapid fire picks in there. We're gonna look at crude oil and the dollar and gold very quickly.
Enter your symbols now because there's always a little bit of a lag. We'll look at the other ones, then we'll go through the rapid fire.
What do you think the lag is? 10 seconds?
It's 15? About 10. It's YouTube.
10 seconds?
I think it's shorter. I think it's like 5.
5 seconds.
5 to 10.
Yeah.
I'm gonna test it. All right, crude. Nothing to see here. Are they talking to Iran or are they not talking to Iran? That's the question.
That will be the news. I mean, they did have the oil inventories, which I actually had to, on my Forex Factory economic calendar, had to go down to the yellow.
Is it white yet?
It's yellow right now.
Still yellow. When do you think it'll be white?
I don't even care what the event comes in.
Yeah.
It did have a little volatility on the event, but heck, it has more volatility on any given random day. It doesn't really matter. Crude is at best neutral, I would say. I would put it on the negative 45 personally right now, Matt.
Based on the follow through of yesterday coming into today, I think you got to be somewhere between the 45 and the 45.
Yeah.
You got to see how 56 plays out and how 60 plays out.
We buried the
lead.
That. Silver before gold. Take a look at the silver chart. It's an incredible breakout right now.
Are you finally going to give me credit?
Dude, ding, ding,
Are you
ding,
finally going to give me credit?
Wow.
I have been saying this for 2 weeks now. I've been saying this for 2 weeks. It's got an inverted head and shoulders. That little shiny metal can play catch up real fast. Even 2 days ago when we're like, okay, we're done with gold, I'm like, what about silver? Come on.
Great job, Matt. In fact, in the chat, everybody type in.
Thank you.
Great job, Matt. I agree.
I want all the accolades.
Golf clap on that one. What a beautiful candle. What a beautiful run. 1.7% on a day where the market's not doing a lot. I mean, that's really, really impressive. Gold is up 0.8%, not to be completely forgotten about. Gold is still moving a little bit here on dollar weakness.
Well, I'm forgetting about it right now on that breakout.
Dude, you're not going to forget about it if it breaks 1440. I'm going to tell 1442. I'm going to tell you that right now. Silver here, like it, bullish. It's a hold for me, not a new entry, but that's because I already own some physical silver. Yeah, gold breakout would be a new entry.
This one, and you and I were analyzing this in the pre-production. When you look at this on a 4-hour chart, okay, and when you're looking at this, you have a very solid support level going up. You have a very solid resistance level coming down, right? And you're breaking out of that resistance level right here, and now you're playing defense above that channel now. To have this be a breakout, though, I think you have to break this pivot here at about 1429, 1430, right? That would be an aggressive entry for gold, in my opinion, but it's absolutely doable. If you're waiting for it to break out and run, more from a position perspective, I think it's got to break 1442, 1443 over here. And so you do have a break of this trend line. You do have an intraday resistance right here. That would be a good trigger, and this would be a good trigger over here as well. When you're looking at this on that weekly chart, let me give it a little bit more time frame very quickly here, Tim. Let's go 10 years here. When you're looking at that breakout on that weekly chart here, there's really nothing here. So if you break 1442, Tim, 1500, 1490, 1500 is in the signs.
Still watching it, still like it, looking for new entries myself. I think there's a lot of technical signals here, but that big long-term chart is the reason I think everybody needs to remain interested in gold, watching gold, and getting ready to do something with gold if and when you get the signals you're personally looking for. Bitcoin holding the 50-day moving average, Matt. 10K was critical, though. So a battle back here into 10K. It still has lots of testing. I'm not adding anything new to Bitcoin here. What's your read?
No, the only question, are you still holding?
Dude, I've held some Bitcoin for 3 years.
No, you've held. I was telling Cody this. I don't think Cody knew this. When we got done yesterday.
Yeah.
Tim's been a hodl. A lot of people don't know that.
Yeah. I cashed some out, but
I capitulated in June of 17.
No, I bought some Bitcoin back in 15 and then sold it and sold it and sold it. And then I bought some in 16 and 17. And I've held a lot of that Bitcoin now for years, through the entire bubble, through the whole crash.
Oh, you're a holder.
My original, cost bases were like $200 a coin. So,
but Tim's a real trader, and he doesn't panic by typing in hodl.
No, the Bitcoin noobs online, they're all fun.
You don't do that.
Wait, Tim, you didn't mortgage your house to buy Bitcoin?
No, he didn't. He didn't do a reverse mortgage to pull his money out to buy Bitcoin. No, he didn't do that.
Well, there's a lesson there, by the way. If you're willing to speculate on something very, very aggressive, and the capital in there doesn't represent a lot of money to you as a percentage or of your whatever it is you're investing with, it's easier to be patient with a premise, right? I think position sizing is everything in trading and investing. I mean, it's such an important thing, because the second you over position size, whether it's a day trade or an investment, you're adding emotion to something, which makes it more complicated.
Slavic, you also focus on 2-minute time frames. Slavic's average time in a trade is 8 minutes. So he's like, I would have held. no, you would have sold. Yes.
We are having fun
I
here.
love Slavic.
I've heard Slavic say he's nervous when he can't get something to close before the day ends.
Oh yeah,
he is.
He's like, oh, now I'm holding it overnight. Like, oh.
Yeah. So no, Slavic did not hold Bitcoin for 3 years watching it. No, that's not him.
That's not Slavic.
And by the way, that's not me either. So
it's not most people. I mean, to be fair, I mean, most people don't hold on to assets like that. And I get it. I get why. I was talking to my wife the other day. I'm trying to come up with a plan for what I want to do with the Bitcoin, because I don't need the capital. I don't want to lose the capital. I believe in the fundamental idea over a 10-year window. And I think as a young investor, Matt, one of the mistakes I made is I never held anything that I believed in. I would always get rid of it within like a 6-month window. And as I'm getting older, I'm more patient. Right or wrong, it may end up crashing all the way down to nothing. I get it. I understand the risks, but I still see the fundamental value in the tech.
I understand. Totally understand your argument. I don't necessarily agree 100% with it. I'm not the believer in the crypto space that you are, but I'm also going to say technically I'm a little concerned about it. And not only did you break that $10,000, you have a very significant intraday trend line here, T, that Bitcoin is really kind of fading into right here as it approaches that 10,000. And so, it's certainly, Bitcoin can do anything. I mean, it's like, it's literally, it can do anything. But from a technical perspective, I do have a decreasing trend line from an intraday perspective. I have a horizontal support level, as you can see right there at about 10,000 as well. If you can break back up above that, there might be some triggers here, but you got to say technically the probabilities to the downside here.
I agree. Don't care. It's a hodl for me, Matt, on this one, because that's why short-term signals don't matter. I mean, it's such.
No, if you're a hodl, you're not going to freak out on the 1 hour time frame. No,
I better not. I mean, after years and years and years and years of a premise, if I talk myself out of the investment,
so I can't convince you with a 1 hour intraday bearish downtrend.
The analysis is spot on. Do not get me wrong.
And by the way, my 1 hour trend line is a 30% drop in price. That is insane.
It's crazy.
That's insane. Think about that for a second. For an intraday 1 hour time frame to have a consistent trend without a gapping situation down 30%, that's,
by the way, right or wrong,
only Bitcoin.
I'm less concerned about my Bitcoin than I am my Ripple. And Ripple, I've had the same approach to for a long time. And that I really don't like the trends with that company and what they're doing. But that's a different animal. We're at rapid fire, Matt. I want to get down to it. 5 minutes of rapid fire. We've got a bunch of symbols in here. Welcome out as always, guys. We've got 65 people watching here live. We've got 26 thumbs up. Give me a quick thumbs up if you're here. You're getting value out of our show. And if you love us, comment. Do something. If you're watching this later, comment. Get this message out there. Let's build our community and build our team here in our tribe at Tackle Trading here. MAR, Marriott, Bob LeBlanc. Matt, you first.
Hey, really quickly, because I want to grab the numbers from the options report. I think the reason a lot of our students have this on here, because it was put in multiple times in the chat, was because it was on the options report and it triggered in, but it has not stopped out. So I'm assuming we have a few traders that are a little nervous right now.
Well, you should never be nervous about a trade.
Yeah, because we have the plan. Trade the plan.
It's just a trade out of 1,000 trades you're going to make. But this is a frustrating situation when you trigger in aggressively and then it comes back down. And so it's just the difference between aggressive triggers versus conservative triggers. A conservative trigger would have waited for confirmation and then put their order 10% of the ATR above the high. An aggressive trader will put their order in on the breakout, and it's just an analysis of probability versus reward versus risk ratio is really kind of what you're looking at. That's a good breakout there on Marriott yesterday. You cannot shy away from taking that trigger, because if you shy away from taking this trigger on the breakout, then you're just going to shy away from every breakout, and breakouts have a tendency probability based to run. Obviously, you had a little bit of a snapback, come back down. this does change the analysis if you're not in the trade. But if you're in the trade, just keep your stop loss. Let your stop loss do its job. It's there to stop you out if it ever goes and hits it. But I could still see it trigger back up above the intraday here.
Yeah. Nougat, I'll take this one. NUGT, gold miners, Matt. Popular ETF that a lot of people trade, breakout running. It's beautiful. I mean, what else are you going to say? You're talking about a volatility product, though, and a leveraged volatility product. So you better dang well know what you're doing here and what this product represents. Chart is great, though. You got to like it from that perspective, and the metals have been bullish.
Yeah, it's kind of what we were talking about on Marriott. Are you going to shy away from taking this trade on a really good breakout, ascending triangle in a bullish uptrend breakout?
Nope.
Maybe you wait for confirmation today and put it above the high for tomorrow, but that's a great breakout.
Let me look at the leap options on Nougat here. I mean, if you're buying the equity, the ETF itself, you pay $31, and there's a lot of great cover call opportunities, but you're talking about real volatile. January 21s, oh man, there's no reason to play the leaps. The equity itself is only 3 times that. I mean, the long term are $1,150. So you're paying for
play the equity.
Play the equity here. Interesting product. I've been looking at leaps more today because I've been seeing pricing inconsistencies recently, Matt, and it's just grabbed my attention.
I also think those pricing inconsistencies are a lot because we've been talking about Beyond Meat with Mark a lot.
Ding, ding, ding. That's exactly right. And maybe tomorrow we'll show them that because it is crazy what I'm seeing in the leap options. Ulta, we got to kick the foot on the gas pedal here, ULTA.
Nice breakouts.
You got this one, Cody, young man. You stay in.
Yeah, that's exactly what it is. It was a breakout. You could either have taken it aggressively at 360 breakout or a little bit above the that old wick candle from about a month ago. But that's a good technical breakout. I like it.
Matt, Tim, Cody, in order as we go. Target.
Is that me?
Mm-hmm.
Okay, target here, consolidation in a bullish uptrend. We've talked a lot about this in the halftime report, in the scanner report meeting, and in our scanner reports. I like breakouts with clean triggers, and this has a clean trigger. You can see the resistance level here, and now here. A breakout of that, whether you're playing it aggressively or conservatively, would definitely fit within the step system.
Mm-hmm. ADI. Better charts elsewhere. I do like a breakout at 118, but I think we're still more than an ATR away from that. I would probably look for something else.
Yeah, you can play that breakout though when it doesn't.
118.50 when it happens. Yeah, Stone, STNE, Brazilian credit processing company, one on my list. Cody.
That's an ugly chart, but there's multiple ways to see this. You can see it as it finally gaining some steam. You can see it did break back and fill that gap that it had a while ago, but I mean, it's an ugly chart. I think there's better things out there to see.
Got to know your company. I agree. I mean, if you don't know the company, that chart is ugly. If you have understanding of the history, because I watch this one almost every day, Matt, and I love this breakout at 35.
Yeah, I hate to disagree with Cody there too, but I like the breakout here too.
I love it.
See, to me, I look at that chart. I'm like, that's an ugly chart. I only have a year's worth of data, if that, and it just, to me, I'm like, I don't like it.
And based on the step system, I mean, one of the things you look at on breakouts is you look left of the chart. And when you're looking left of the chart, you have resistance here at 38.60. You also have an overhead resistance at 45. But if you're breaking out, you still have about $2 of appreciation on a $35 company, which is about an 8% price movement, which means you still have room for the price to run. And so you look at that and you're like, okay, that's a legit breakout out of a high base. I'll tell you, this Brazilian company, yeah, I'll tell you what Christian would say. I'll tell you exactly what Christian would say. Shitty company, go long.
Go long. Yeah, I agree with that. Throw it as far as you can throw that stone. Let's keep going here. TAP, Molson Coors. Beers in the summer, you would think so, Matt, but European company here, European economy has been under pressure. Not good.
No, not good. Earnings coming up, bearish downtrend going into it. Bearish retracement is forming. Projections got to be downside.
Matt, I'm giving you 4 in a row. Give me quick answers. KL.
Yep.
KL options report approaching its first target.
Good. Disney, Matt.
Disney, you can see it's coming back down into the trend line here. A lot of fade action here. I would consider a trade on a doji on that trend line, but I still think the better trade with the better higher probability is to wait for the breakout on Disney.
Two more for Matt, real quick. Herbalife, HLF.
Herbalife. Remember when this company was just being fought over by two billionaires? Oh, the good old days. Breaking up support here on Herbalife, and you should see price depreciation coming into the earnings.
Good pick there, Coach. I like it. CVS.
Previous Tackle 25 stock got booted, and it's going to be infamously known for the first stock ever to get booted from the Tackle 25. Had a little bit of positive gap, and I can't remember what the news was on CVS, but obviously when you're seeing that gap with this red candle, that is an exhaustion gap coming back down to fill the gap range. If you're looking at this from a buy side mechanic, you do have a support level right here at 56. You would definitely have to see some slowing momentum. Give me a doji, and then give me an upward movement in price. That is tradable after this gap fill, but it's got to slow down and give you some triggers.
I'm taking quick four here, Matt. AEO. W reversal potentially developing here. Pepsi, PEP. High base. I mean, clear trigger up at 135.25. We do like clear triggers. GH. Same thing. Nice green candle on a day where the market's down up 5%. Yeah. Earnings coming up. Might be a tight trade on a breakout, though, but I don't mind it. I'm interested.
The problem is, again, triggers. I mean, you would have to trigger above 97. You obviously have resistance at 100, and then looking left of the chart, you got a tick at 106. Tough trigger there.
Yeah, tough trigger. Twillo, one of my favorite companies, most of the market's favorite company. It's on a lot of lists. It's been a nice runner. Just earnings are going to disqualify that one for me. I think we're going to be within that 2-week window today, actually 14. So it would have to trigger here this week. And it'd
have to trigger above 150.
I know. Not seeing it right now in the short term. NVIDIA.
Okay, NVIDIA.
And Cody, you'll get one more next, and then that we'll be done. Matt, you take this one.
Nothing to see here on NVIDIA for me. You got mixed signal from an intermediate neutral trend to a short-term uptrend. Even if you're above 172, you got lots of resistance above here.
And the world traveler, the Wisconsin Badger, the man from the north side of Chicago, my man David Kaiser out there, Oracle.
Oh, I like Oracle. Yeah, this thing's coming right back down to the 20. If we can get a doji right around 58, look for the trigger back above wherever that high of that day is to trigger in for a nice bullish retracement.
Do you like those nicknames, by the way?
I did. That just rolled off your tongue. That was awesome. David, all of a sudden, David's thinking, "Man, am I like the Daenerys from Game of Thrones?" But I will say this about David. David, before you know it, you're going to turn into a real trader here. I like your pick on Oracle. Yeah. Nice little bullish retracement, but you have to get a doji, have to get an upward movement in price.
David, you might be a bird dog one day. We'll have to wait and see. Let you develop those skills. That's a nice retracement, though. I do like that.
Very pretty chart. I like it when I get ones
dividend
like
today.
Destroyed charts.
Dividend today or tomorrow, Matt?
I think dividends tomorrow.
Yeah. So that.
And no, for the new traders who are not tackle, hashtag team tackle. No, dividend is, you can't buy the stock one day before the dividend. And a lot of times on dividend day, which was yesterday, you do have the stock come down to offset the dividend, and then you get a doji. I like this here.
Ding, ding, ding. Guys, that is our show here today. Cody, anything I've got to be reminded of that we're supposed to be dropping, promoting, anything like that?
Not on my radar. I can verify that, though, if you can ramble for about 2 seconds.
Well, I can ramble as long as I want.
You asked a justice to ramble?
Ramble on, Led Zeppelin, Lord. One of the great songs of all time, young man. In fact,
speaking of music, Tim, I met an individual in Dallas. His name is Matthew, and he's a creative, artistic type individual. He was a musician, and we started talking music, and I love music, but I'm like, Matthew, I got to introduce you to my brother because you two would just hit it off.
Tell me, if you guys out there and your team tackle, do you feel like the older you get, the harder it is to get into new music? Though I'm feeling old a little bit, Matt. I'm sticking to the hits.
Listen, my playlist right now is 1970s.
I was listening to some 60s, 70s, and 80s country music for the last 2 days in a row, and I'm loving it. I mean, of course, it puts me in a nice mindset.
I'll tell you, for some reason, I woke up just singing David Bowie. And so I've been listening to David Bowie for like 2 hours before we got on here today. And I'll tell you, David Bowie just puts me into a good mood.
He's one of my top 5 of all time. There's no doubt about it. Ziggy Stardust is in my top 5 albums of all time. Incredible music. And one of the best musicians. I'll tell you. Yeah. Think about this. Tell me another musician that adapted to the times the way David Bowie did. 70s Bowie, 80s Bowie, 90s Bowie, all the way until the day he died. He was evolving as a musician. What a wonderful thing. Good lesson in trading, by the way. The markets might change. You have to adapt to market conditions. Cody, there you go. I rambled for 2 minutes with the help of
That was
Matt.
a very nice ramble for me to come in and say, no, nothing on the agenda to promote right now.
All right, then very simple. We will see you guys back here tomorrow. Tackle Trading's halftime report every day. We are live here on YouTube. Subscribe, like the channel. Make sure that you click the bell so that you know when we do go live.
By the way,
and
Tim,
finish
tomorrow,
that step system.
By the way, tomorrow we're gonna go through the daily routine, the new updated daily routine.
Beautiful.
And so for hashtag Team Tackle, we have updated our daily routine process, and we'll go through the slide deck and whatnot. But I'll be recording a video on it as well. So hopefully that'll help people do their daily routine.
Great job, guys. Great job, Cody. Great job, Matt. We'll see you guys tomorrow.